Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. Okay, so overnight high, 40.40. So we're pushing right back up into where we were back on the 23rd, 39, 27th, 34. It's these mid to high 30s that keep holding things in. So they've already pushed it back to around 33. Recall the pre-FOMC price there is 40.3375. Yesterday was just, another one of these days interacting with all these moving averages. Hourly chart, we talked yesterday about how things were just kind of narrowing. Now look, the bulls have, broke up above that a little bit, making some higher highs, at least relative to where we've been this week. Would not be surprised at all if this 34 area doesn't hold, if this 50 doesn't hold, which was, you had a little bit of support at 30 there after the Europe Open. If it comes back in, would not be surprised to see it retest the hourly mid-band coinciding with that line there. If that holds as support and you make a subsequent higher high, well then, buckle up, bears, because we're going to go see this monthly pivot again, and you have nobody to blame but yourselves. I cannot think of more opportunity to convert weekly pivot to convert daily mid-band than they had yesterday. 2 hours we hung around. Here's your daily mid-band, the green line, a couple hours below weekly pivot. Again, it's very sloppy. It's very sloppy. There's no other word for it. It's very sloppy. It's indecisive. It's all those things we talked about yesterday. And you have to be very careful not to overtrade it. You've got to hit your number and move on to the next day. Don't get caught trying to get more out of it than you can. So, I did something yesterday that I rarely do. I mean, I was scalping off for, one for 5 handles, one for 9.5 handles, 2/3 of a trade. Why? Because it gets me into a double-digit day. It makes our goal in the room is 4 handles a day. It gets us there where we need to be. And then we took a couple shots in the afternoon to see if anything wanted to run. Couldn't really get anything going. And we end up with a 13 handle day, which on a day like yesterday, I will take it. I will take a 10 handle Monday and a 13 handle Tuesday on a week that is consolidating like this. And we'll see what today brings. But you can't sit there and say to yourself, well, I want the huge move, and I'm gonna dig in, decide which way it's gonna go, and then tear yourself up while the market tears itself up, waiting for something that the market is not prepared to do. Price will be ready when price is ready. This is a good start, but I wouldn't be surprised if they brought it back in to test this area, and then if it's anything like it's been, maybe fight over it a bit. If you can't get this test, if the bulls hold it here and you get a higher high, then I think you're just going to it's going to look a lot like this. It's going to be narrow. It's going to be hard to get into, hard to hold on a short-term basis, because it's going to grind. It's going to have air pockets that we've seen. There's all kinds of little air pockets in this tape. The one that really jumps out at me from yesterday is we were kind of lingering at 93, lingering right in the area of the weekly pivot. And then when we drop down here to this 80 area, the initial drop was from 92, 93 right down to like 85, 75, 86 half in an instant. So they're just, they are washing people out and washing people back. And then after these little air pockets, whether they're to the upside or the downside, they just find a new area to grind. So anybody looking for follow through that wasn't there for the air pocket, they just instantly become ground up. They didn't get to take advantage of anything moving in their direction, and they're just boring and frustrating people right out of this market, at least on a short-term basis. Because in the bigger picture, it's not ready to make any big decisions. Not very exciting, but it's the truth. That's where this market is. So rather than give you some glorified thesis about how the market's going to do ABC with some gigantic idiotic target to the upside or some moronic target to the downside. It's better just to tell you exactly what actually is happening, which is not a whole hell of a lot, except for your broker picking your pocket if you're overtrading. So don't fall into that trap. All right. From a level standpoint, you've got volume weighted average price is way down at 40.28, which is interesting. That also plays into a little bit of a push down. We talked about hourly mid down at 17. Proprietary moving average 35.75. That pre-FOMC price is 33.75. That coincides with a 5-minute mid band. Overnight range is like 34.25, so that's normal. But I would not be surprised, again, to see these lower areas get a test. It might be, it's either going to take forever to get down there, or it's going to be an air pocket, and then we'll see what they do with it after that. I don't think it's going to be, it's not going to be efficient. It's not going to be efficient. And it's nothing that I, as a trader, want to anticipate either. So we're at a really important area here between 32 and 36. We'll see if they seal it off. We still got another, what is it? It's 8:41 Eastern time as I'm doing this. So we'll see where we are. But don't read more into this than what it is. It is a very indecisive, choppy, pickpocket tape. Treat it accordingly. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to you tomorrow.